Today, I'm going to talk about Google's financial report, latest financial report, which is the fiscal year of 2022. That can let you understand the outlook of Google, if you should invest it or not. It's a very long financial report. I spent 3 hours reading it for you. I summarize it for you so you don't have to spend 3 hours on that. So it will be very juicy. Give you a lot of information about Google, Alphabet, very strong stock. I would say very major stock in the U.S. stock market. So you better have a good understanding of it, which this video will provide you. Then in the end of this video, you will learn everything about Google and decide if you should invest or not. All right. So this is the EPS trend of Google. You can see Google's revenues kind of increasing a lot in the past few years, like stably increase. And during the pandemic, like 2020, 2022, between 2020 and 2021, it's like huge increase because of people printing a lot of money. Then recently, you can see the recession happened. Revenue, the trailing revenue decreased, and also the quarterly revenue decreased a lot. So this is just the overlook, and we're going to dive in why it happened and how it happened. Okay, so this is the financial kind of income statement. You can see the consolidated revenues from 2021 to 2022 kind of increased 10%, which is a good thing. And Google's revenue, by the way, is always increasing, always been increasing. The problem is the cost of revenue and other expenses. So the cost of revenue also increased like even more than revenue increased, like 14%, and operation expenses also increased 20%. So the cost of those things increased faster than revenue. So that's why Google's profits got eaten. They have less profit. And we can just see operation income, which is the kind of how much Google earn, right? Operation income. It's not like what they earn in the end, but it's like what they earn from their operations. So it's like decreased 5%, which we can already know from this cost of revenue, cost of operating expenses. This will decrease. And other income, which is very important thing, because if you just look at the operating income, it decreased by 5%. But why the general like net income decreased 21% so much? It's because of the other income. Other income decreased a lot, decreased 1.5 billion, which is significant. And in terms of percentage, 129%. So what happened to that? We will explain later. And what does it mean? It's actually very intransparent, but we will dig into more later. So total EPS decreased by 19%. Total net income decreased by 21%, which is kind of significant. That's why Google's stock price kind of tanked recently. Also, definitely there are other reasons about like ChatGPT, that kind of things. We will talk about it later. So the highlights for the income statement we got, its revenue actually increased 10% year by year, which is good. And what's the driving force is the Google Cloud service. Google Cloud's revenue increased a lot. And now it's like 7 billion, and increased by 37%. Which is really a lot of it. And operating expenses were a lot and increased 20%. Why? Mainly because of headcount growth. So every time you see operating expenses, you will know it's because like one of the reasons for Google, it's like salary, right? So headcount growth a lot. They increased 20% of this cost. That's why you see Google's cutting jobs end of last year, 12,000 jobs. That's kind of action to reduce operating expenses. Okay, so 2022 ahead, yes, 12,000 jobs cut, and they will be paying them around 2 billion as severances. And this severances fee will be recognized in Q1 2023. which is a lot. 2 billion severances. Can you imagine severance? So 2 billion. And they're also optimizing the office space, basically because more people working from home. They are reducing office size, and also because a lot of people got fired, so they don't need that big of office. But when they can terminate the leases, they will have exit costs. Exit costs is around $500 million. It's $500 million. So it will be recognized in Q1 2023 as well. And moving forward in the future, because Google says AI is so important, AI is a crucial thing, we want to be an AI company, not an advertisement company. So DeepMind originally it's included in the other bet, and it's now included in the Google's operating, Google's revenues. It will be recognized as like Alphabet's corporate costs, not the other costs, which is weird because the original reason why Google want to reorganize as Alphabet and Google service and other bets, it's because of one of the big reasons for DeepMind. They're burning too much money. They want to remove it from its original operations, but now they want to combine them again. I really don't know what's going on here, but that's what they want. They just want to combine them. So Alphabet's corporate costs will be combined with Google. There are two reasons for it. One is like what I say on the surface. Really, AI is important, so they want to combine all the. Second reason is maybe the Alphabet is burning too much. DeepMind is just burning too much money. They want to combine it to Alphabet's corporate costs, so you won't see, right? Okay, so Google search. Let's see, Google like breakdown of revenue. Google search increased a little bit, and Google YouTube ads increased almost no increase, almost just same level. You can see that when you watch YouTube, there's so many ads. They couldn't increase it anymore. And Google search is at least as good thing is increasing. And Google Network is a Google Ads on mobile phone, like other kind of Google places they can place ads. Also similar. So revenue wise, it did not increase, but what's increased is the costs, right? Costs just keep increasing. I think they just overhire too many people. And Google advertising in general, performance is good, 10% increase. Google others increase a little bit, and Google service total is like still increasing. They just need to control their cost. And Google Cloud revenue wise increasing, but it's actually concerning because they're still losing a lot of money in terms of a Google Cloud because their cost is just too big. I don't know why they keep losing money in the cloud services. This is interesting because my kind of expectation for Google is a Google Cloud. I expect Google Cloud will kind of overtake, at least become like 50% of the revenue of the Google advertising. Now it's like 10%, more than 10% of it, around 10%. But in the future, it will grow to 50% of it. But if Google Cloud couldn't make any money, that's pointless. You have revenue, but doesn't mean you can make profit, right? What we want to see is Google Cloud making a lot of profits, but we are not seeing that so far. And other bets, revenue increase, but the cost for other bets it's a lot. Okay, so revenue doesn't mean anything. We need to see the costs of revenue and operating expenses. And hedge gain, actually hedge gains, they have a lot of hedge gains, so that's not important because it's just fluctuating over the years. Okay, so let's see a total revenue increase. Okay, let's see this some breakdown cost of revenue, and we can see the total cost of revenue. It's okay. It's like 43%, 45% to 45%, 2% increase. Not really concerning, I would say. What's really concerning is they increase 21% in headcount in 2022. That's why their R&D costs increased from 12% of revenue to 14% of revenue. That's why they cut so many people. I don't know why they overhired. They just couldn't control themselves. They just think the macroeconomics will always be good. I don't know. And I don't know why they hire so many people for. And then they're cutting people now. Really not necessary, I would say. Google's management, I think we need to take a look. We need to use a magnifier to see, because I see a lot of problems that's happening from Google management. And in terms of operating income, this is very important. Operating income. This is like subtract to cost of revenue, operating expenses. So it's very meaningful number. If you see it's still plus, means it's making money. So Google services making money. Of course, it's Google's main business, Google's advertisement. Google Cloud, you see, it's why I'm concerning. You have significantly more revenue, but it's still losing money, still losing a lot of money, 3 billion a year. Hopefully, in the future, they will be able to convert this to positive income, not negative. But we don't know how they will do it. We don't know when they will do it. That's a big question mark. If you consider investing in Google, this is a very big question mark. Before you can you can make a theory about it. Don't do it. Don't invest. Okay. And other bets, it's like DeepMind, Waymo, which is a self-driving car company. It's still losing a lot of money. 6 billion over year, last year. It's a lot of money and losing more money. I think that's why maybe they want to combine DeepMind to their Google service. Okay, so consolidated things, the income from operations, just decrease, even you have more revenue because it costs a lot of money, in terms of a lot of divisions. Okay, this is the single most important thing that you want to know. Other income, decrease. Other income, so what I say is other income in 2021 is positive, in 2022 is negative. So it's it's not 1.5, it's 15 billion reduction. Okay, due to many reasons. ECJ says here's the most important part. I already research it for you. So due to the change in gains and the losses on the equity securities, what's equity securities? So non-marketable equity securities means equity securities that you couldn't sell, like bonds, like private stocks. So most of them, I believe, is private stocks, like the stocks they own, like DeepMind's stock, DeepMind's share, and the Waymo's share. So those are the best things. So those things combined, they just lost a lot of money. Could be DeepMind, could be Waymo. They didn't say it, so it's very intransparent. The share, so just let you know, non-marketable security can be shares of private companies, not limited to, but could be shares of private companies. And this could be the companies that Google invested. Maybe not 100% controlling, maybe 50%, 70%, or less than that. A little bit confusing. Yeah. So this is the crucial part. It's making Google losing a lot of money now. Highly suspect this is DeepMind, but how can these other bets is already DeepMind, right? So I don't know if DeepMind is considered in other bet. How can it be other income? So I don't know what this is. If you know, please let me know in the comment section below. We can solve this puzzle together. So in general, the conclusion for Google is okay. So far, it has some of mysteries. We need to understand what's a non-marketable security, which we couldn't know from this financial report. And I believe if you're not like Google's high-level people, you won't know. And if you don't know this, it's a little bit hard to make a theory of investment. And the Google's ads, Google's revenue, Google services, revenue is still growing up. And seems like Google cut quite a lot of people. They can control their cost, their salary, operating expenses much better this year. I foresee their financial report will be much better looking in the future. But the biggest problem is the challenge from ChatGPT, which is by the company called OpenAI, and now they are in a partnership with Microsoft. So they're combining ChatGPT with Bing search. It's actually a very strong search kind of a device. They can compete with Google search. We don't know what's the effect yet because this Bing search plus ChatGPT is still in beta. but it's going to be available real soon, early this year. I mean, at least this half year, right? And we don't know how they will impact Google. And so far, Google's search engine it's like 90% market share, or 95. So let's say even ChatGPT plus Bing can have like 20% market share. They will shake Google's revenue a lot because 60% of Google's revenue come from Google search, right? So we don't know how they will impact, and I think ChatGPT plus Bing is very useful. Not all of the search can be done by that, but let's say 20% of search will be done by the ChatGPT plus Bing. Then they will shake Google a lot. Okay, so that's my conclusion. If you would like to receive more investment related videos like these, like financial report analysis, don't forget to subscribe. Other than that, I will see you.